Welcome back to the Dividend Diplomats YouTube channel. You've got Bert, the Hurdle Man, and Lanny, the Dividend Diplomats, guys. And today's video is all about, is it time to try to grab this 7% dividend yielding stock while you can, while it's priced at this point?
Smash that subscribe button, everyone. Give this video a thumbs up. Is it time to buy this 7% yielding stock before a pop may happen? Is this stock just ready to explode and it is time to scoop up the shares now before you miss that hype train leaving the station?
Oh, the hype train, guys. Again, the S&P 500 is back to setting all-time highs and all-time records. We're filming this here June 12th at 11 p.m. And we were talking about a stock that I actually own 237 shares of, guys. I got some skin in the game here, guys. But yeah,
I'm
the
right there
SPY.
with you. I'm right there with you. I have some healthy amount of shares in this company.
Yep. One of the
Yeah,
first individual stocks I have ever bought as well, guys. Yes, don't hate us. Please stay on this channel because they yield almost 7% still. We are talking about, yes, Pfizer stock. Ticker symbol is PFE. Don't go anywhere. Come on, stay with the DD. Don't be afraid to talk about Pfizer stock, guys, because this stock has had hell of a lot of momentum the last 5 days, up almost 7% through June 12th, up almost over 7.5% in the last month. Now, guys, they are still down this year by 6.65%. They are 141 billion in market cap. So just remember that. This is Pfizer stock, guys.
so what is happening here? Because the earnings release, when you actually peel back the numbers, Laney, looks pretty solid. The numbers look good for Pfizer right now. They had $13.7 billion in revenue. They had 52 cents of earnings per share, and diluted earnings per share and adjusted earnings per share. It was even higher when you back out some of those one-time factors, some of those non-recurring costs. That diluted or adjusted,
Salaries.
yes,
Just kidding.
development costs, all the things that you
Yeah.
just jam into those non-GAAP metrics. Adjusted jumped up to 92 cents.
Yeah. Again, I know it's always doom and gloom. And, again, hopefully we're getting further and further away from COVID-19 and the vaccines. Obviously, I know Pfizer has moved on with how they're, impairing that asset and moving on from reporting revenue and all of that. And the focus now is back to business, really, for Pfizer, which is just honestly creating, designing, testing, and producing pharmaceutical. Again, not oh yeah, give me the pills, guys. No, no, no. But again, from a business
This
standpoint,
is Lanny's rallying cry. Give me the pills.
they reaffirmed guidance too, and many aren't. If you didn't catch our Saturday video, the company on that day, actually raised their guidance from their initial one. So here's another stock after the first turbulent quarter of the year. You got to remember this was all during RFK stuff. This was all during, the tariff this, tariff that, volatile time period in April, guys. And, they're sitting here saying we're reaffirming guidance. A lot of momentum as of late in Pfizer. I mean, you look at AbbVie, you look at GlaxoSmithKline. There's a lot of momentum, I feel like, in healthcare and pharmaceuticals right now, surprisingly, with all of the scare from the new administration coming in.
Yeah. So the question is this really a time to buy Pfizer? Is this the moment to grab that 7% yield? We're going to run them through the screener to find out, Landy, which focuses on that price to earnings ratio, that dividend payout ratio, that history of increasing dividends, and that bonus metric, that dividend yield.
Oh, yeah. We're talking about that trifecta, guys, here with the DD stock screening metrics. Again, we're filming this Thursday night, June 12th. Pfizer's PFE is their ticker symbol. They are trading still under $25 a share at 24.84, guys. Seeking Alpha, yes, Seeking Alpha has analyst expectations of earnings at $3 flat. So that's actually a price to earnings or a PE ratio of only 8.28.
Very low. I know it's a lower sector, but that's even lower than some of the major players in the sector. I think AbbVie, when we talked about them, was around 13 or 14.
Yep. And even if you use just their annualized first quarter earnings, it's actually, still like only 12
Yeah.
time earnings.
Yep.
So,
Well, let's see how their dividend payout ratio is looking. Their annual dividend is $1.72. So that gives you a payout ratio of 57%. So below our 60% threshold and in that perfect payout ratio range of 40 to 60% that we love.
and similarly, using and annualizing that first quarter earnings per share of 52 cents times four, the payout ratio goes from 57% to about 82%. So there is still, not as much room to grow and pay the dividend. It's not quite at the 100%, but I still think that this metric is improving for Pfizer, guys, especially after I think they saved and they're set to achieve their $4.5 billion in cost savings through the end of this year. And then they're tacking on, I think, another 500 million, I want to say, by the end of 2026 or seven from reading their earnings release from the first quarter, guys. So they're saving and cutting costs where they don't need it anymore, which I love.
Love it. Their 5 year dividend growth rate is 2.63%, and they have increased that dividend for 14 consecutive years.
Again, you're okay with it on the low side because that yield now is still 6.92%. So, again, recently you could probably have gotten their stock closer to that 8% yield. Again, you're okay with a 2% dividend growth rate, 3% dividend growth rate when you're getting paid this much. So, still getting paid 6.92% with the growth rate that low, that's how the seesaw works. Higher the yield, the lower the growth.
Yeah, and you've mentioned earlier about their recent performance and already how year to date they're still down 6.65%. Over the last 52 weeks, down 10%. Over the last 5 years, down 22%. So they're making a comeback now, but they're still down from where they had been in previous highs.
Yeah, so I know a lot of us shareholders, again, Bert and I included, we've been very patient, guys, with Pfizer. We've, maybe I know I've dabbled a share here and there, along the way, the last year or two. Bert, I'm sure you are the same. Um, have you guys been buying Pfizer stock too over the last couple of years? Were you grabbing them in the low 20s, when they were yielding 8%? Let us know in those comments, guys. But the real question is it still time to grab it while you can, while it's at this yield? Do you feel like there is momentum and the stock will only go up from here? Talk about $27 per share. Talk about getting back to close to $30 per share, where the yield situation will look far different, guys. Is this risk of Pfizer to acquire shares now? Like, are we in this last window, or do you think it's still going to be here, or even better opportunities are going to come with Pfizer stock?
Well, it's hard because we talked about this with AT&T several weeks ago on the video. There was that long period where AT&T was below $20 per share, and
Below eight.
the metrics didn't look the best at that time for AT&T. They had that high yield. They were working through some things. And looking back now, we should have added a lot more AT&T because they still had the cash flow. They still had the strong earnings. They still had a lot of the strong things that you're seeing from Pfizer's earnings release. So is this that AT&T moment for Pfizer where you could catch them now before they pop? That's a tough question to answer.
Does Pfizer get to finish their story like Cody Rhodes, guys?
For
If you
God's
know,
sake.
yeah, but no, investors, viewers, are you holding Pfizer stock? Do you think this is stock still to buy right now? Let us know what you're doing with Pfizer stock and what your expectations are here in the next. We're talking month, 3 months, 6 months with Pfizer stock.
You haven't already subscribed to the channel. Give this video a thumbs up. And Lanny, what do we need to tell all those diplomaniacs out there?
Listen up, you jabronis. You're either with us or you're against us, Jack. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.